So looking at the render chart, it's a three-wave move down that might have bottomed and finished in April. Many charts did the same. They corrected in three waves. And now if we talk about the current structure, I mean, based on the larger context, my interpretation is that the fifth wave to the upside should be an ABC structure. This is likely going to change. I mean, there's nothing reliable about it because like on many other charts, we do have a five-wave move up from the April low. The pullback afterwards was very deep. Didn't break below the April low, but it was very deep. That in itself makes it already questionable. We have here, like, I'm tracking it in very similar ways on the Solana chart, also a three-wave move up. That does not give me much trust that really a low has formed. So it's not a trustworthy structure, but it could be a 1-2 setup here, where the wave 1 is in three waves, and then that would be a 1-2 setup in wave C in yellow. But to keep this alive, the market should avoid a decisive break below $2.95. And we might rally higher in a third wave, then get a fourth wave in the fifth. And then we would have to look at, okay, where are we, right? Do we have 5 waves up? Then the next pullback will likely be a B wave, potentially. But we will have to see where we are when we actually form all these 5 waves in wave C, So basically, I'm watching this support zone now between $2.95 and $3.49. The third wave should ideally take us higher, potentially, to at least 574, but probably a bit higher. Normally, we say a C wave, like this one, should rally to round about 574 and 936 in this context. But really only if the 295 level is holding. I mean, if we break below that, it becomes more likely that we'll also break below the June low, and then it becomes more likely we're going to break below the April low, and then this entire correction that started in 2024 is likely going to continue, and maybe this here was just some kind of a corrective bounce, which I would say is not unlikely. This whole thing to the downside would then turn into quite a complex correction. Instead of an ABC structure that I'm tracking right now, it would likely be a WXY, and the Y wave probably as an A, B, C, and then maybe this is a 1, 2, 3, 4, 5. Basically, it means that below 295, this becomes much, much, much more probable. So yeah, be careful with that one. While I have a support zone here, there is a bit of a reaction, but really that is way too small to say that we've bottomed there. So yeah, that basically leaves us with unclear long-term potential. But if we get all the 5 waves in wave C, this might be an A wave, then we can add support for the B wave, and then if things go well, maybe it will rally to this area around $17.60 to $27.90, but that really needs to be confirmed. We need some more patience there, and first of all, need to see if we can actually hold the $2.95 level.